Okay, welcome everyone. We'll start our lesson 3. Good afternoon. My name Anjum and it's my email address here. If you have any questions, drop me emails. Today lesson we'll go through LO3, learning outcome 3, be able to review techniques to manage global risks. Not just the local risk, but global risk. Risk is the probability of happening something. Risk can be high, risk can be low, risk can be medium, risk can be favorable, risk can be adverse. Normally, the people say risk means that something is bad, but risk can be good and bad because if you have a high risk, you have a high return. But we need to be look around how we can manage the risk. Okay, so yes, please will recap what we learned during our last lesson. The previous lesson. Do we remember anything from previous lessons we learned? Yes, anything you remember? We learn about first lesson pricing theories. Yes, we learn about pros. Yes, uh, yes. So theory we learn about arbitrage theory. We learn about Gordon. We learn about binomial theory. We learn about Fisher effect. These were key theories. Yes, Fisher effect. So these we learn in lesson 1. Lesson 2, we discuss about working capital. Working capital. We discuss working capital mean the running capital, and working capital is the current assets. Current assets. We discuss current liabilities. We discuss finance in short run. We discuss about pricing in short run. So, and we discuss cash flows and flows can be inflow and outflow. We discuss trade receivable in days. We discuss trade payable in days. We discuss inventory turnover. We discuss about EOQ, the quantity. We discuss stocking, stock level, and we discuss you can work in progress inventory. It can be finished goods and raw material. Yes. So these we discussed in previous lessons. So today lesson will go through our LO3, which is about LO3 is about risk. How we manage risk. Okay, let's leave. What do you think? Grant your knowledge about risk management, not working capital today. Risk management. Do we know what is meant by risk? Yes. What do you think? 1 to 10, where we are? How much we know?
Five.
5. Okay, so we're in the middle. So we'll see how much we will know through this lesson. Yes, always good to be carry on reflective. Okay, so today lesson inductive contents. We're looking financial risk. Financial risk is the risk which is attached or happen due to the cost and the risk. This can be sources of finance. Where you get the money can be create the risk. It can be due to the foreign currency. Think about pound against euro, pound against dollar, pound against other currency. That can be risk which is increase and decrease our cost. Interest rate, we have in the UK we have a base rate 0.01% at the moment, which is less than 1%, which is quite low. then that if is increase and decrease, this will increase your cost. Okay, then causes of fluctuation in the foreign currency. Why currency increase and decrease? This can be due to the balance of payment. It can be foreign trade. It can be due to the Brexit. Yes. So this is all about. That's why the currency and fluctuation can be happen. Interest rate risk and interest rate can be varied due to fiscal and monetary policy. Monetary policy. Fiscal policy is the policy of the government, how much money will spend in each sector and how much money inject in each sector. Monetary policy is the policy of the central bank, increase and decrease the reserve and the basic interest rate. That's the policy of the central bank. We call in other part of the world we call state bank. Okay, next we have risk mitigation. Okay, think about traveling by road, yes, traveling by air, traveling by train. If we can look around, what will be the cost most, what will be, and which way to go. So you have a various options. You have to find the option. So this can be insurance. So one of strategy, if you get the insurance, if you, let's say your something in your house is not working, you have an insurance. So through insurance, you can reduce the risk. Okay. So risk we need to be look around. So that's help, and we'll go through one approach is called Tara and Sara approach. Tara and Sara, that will help to be mitigate the risk. How we can minimize the risk. Other risk is the hedging. Hedging is mean we deal business in the foreign currency. We have because the currency always fluctuate. So what you can do, you can use the hedge service from the bank. You can fix the rate by paying the fees. So currency go up and down, that's not affect you. That's a hedge. So we can hedge it. Okay, then evaluation technique, we can evaluate which one is a high risk, which one is a low risk, which currency is more risky than other currency. So we can do trade in different currency that will help to be reduce the risk. So all our discussion is a focus, which I just explained all the keywords, thus we need to be focused. Any question? Any question? Yes or no? Okay.
No.
Okay, what is a global throughout the world? Throughout the world, business we call global. Sorry, the background. Okay, next now, please global market, which is mean through. Think about Unilever, one of the companies. Think about Nestle. Think about PG, Procter and Gamble. These have operation throughout the world, 130 currencies. 130 countries. They have deal with the different currencies. They have a different risk in different countries, and they have to be managed because they're quite connected. Due to the COVID-19, think about, is every country is losing due to this because China doing trading, shops are closed, China's manufacturing industry is destroyed. Our UK service industry is affected. In Malta, maybe the manufacturing industry address our tourists not coming. So we need to be think of everywhere is a risk due to the COVID-19 that leads to the financial risk. Our economy is around 10% due to the COVID-19 restraint up to now. So which is a huge losses and especially tourism industry. So what we strategies can be, maybe we can start different things. Maybe we can do online servicing. Maybe we can do some activities at the moment. why the businesses want to be diversified. So we need to analyze the financial risk. We can analyze the mitigation. We can review. Okay, to analyze the risk, we can do the ratio analysis. Even we discussed last lesson, tradable, receivable days. If you have a lot of stock, that can be a risk as well. That can be obsolete. It become outdated, and that can be a risk as well. So that can be a financial risk. So what is the risk is? So risk management is the key element of management accounting role. If you're a management accountant, you have to be look around the risk. The ability to identify risk before they arise is your ability. You need knowledge, ability to identify the risk before they arise actually. Then you plan your strategy for controlling risk is a paramount. The consequences of not doing this could be failure of the business or failure as a country even if not managed. This page or this slide we can say yes, or we can say what they look. Definition, identifying, mapping risk. Further aspect can be, we can explore risk management and control risk, which I'll go through in a minute with you. Okay, next we're looking the popular ways to define risk. Risk is an unrealizable potential yet future loss arising from the present action and inaction. If we don't take action or inaction, it can be risk for. The risk is essentially negative factor. The definition may be more specific to the business world. Risk is variability with future cash flow. Variability means it's not stay the same cash. So this sees risk as a both opportunity and danger associated with the uncertain future events, not certain events. Risk can be adverse or in the favor impact, upside potential on the organization objective. For example, if you are variable rate of interest, you would benefit from the interest rate drop, but you would suffer if the interest rate increase. Ideally, people want to reduce their downside exposure, so staying open potential upside gain. So on the way, financial options that come from the high cost. The most financial derivatives effective future prices, interest rate, so eliminate the downside and the upside as a potential. So that's we need to look around in real business. Any question? Okay, a more workable definition. The definition is used standard concerning risk is that risk is equal to probability. What is the risk? Probability. What is the probability in Malta today will be ran? Is there any chance today will be ran there? Hello? Yes, can you hear me?
Sorry?
I'm saying,
Yes, I'm here.
Is there any probability there will be a rain there?
Yes.
How many chance? Probability is it? Probability is a chance, yes?
Yes.
Probability is a chance. How much chance we have? Is it 0.6%? Is it 0.7%? Today will be rain there, or is it 0.4, which is 40%? Yes. What do you think? So, if it's 0.6, it means 60%. If it's a 0.7, it's a 70%. So we can say the probability. If you have a high probability, is mean high risk. Yes.
Yes.
So if we want to sell something that related to or the cold weather, so is a high probability people will buy as well. So we'll say high return. Yes. So high risk and can be high return. So probability of the event occurring, impact. What impact will be? Like Brexit, what impact will be consequences on the firms? For example, a fire at the warehouse could have a major financial impact. If the people, like, doing strike are going like in America, it's not only the impact to the political party, they have impact on the financial as well. So both aspects we have to decide and we have to manage. Yes, we have to look around how we can minimize. Okay, so risk, when we do the risk management, risk and return. So generate high return, business may have to take more in order to competitive. Risk and return often linked. Conservatively not accepting risk tend to be make business less dynamic. Always we have to accept risk. We have to make strategy in action plan. Incurring risk implies the return and the benefit. Benefit can be financial, decrease cost. Okay, what do you think? If we'll buy all electric cars in our company, yes? So first, it will be because the future is more electric cars, yes? In UK from 2035, more all the cars will be transferred to electric cars as a government target. So transfer to electric cars. So what will be happen? So if we invest now, we are helping CO2, reducing carbon, but it costs us more now, but benefit in future, yes? Or we can, our company will be good. So we need to be think about so we can look around activity risk is routine risk day in and out, or is high, how we can avoid it. Identify, develop, you have to develop the strategy. Examine carefully what risk you have. If you don't wear the right shoes in the snow, we have a risk to be, yes, slip. So that's why we need to be make sure we wear the right type of shoe this weather. So benefit of taking risk. If you're taking risk, maybe you're saving few quid on the shoes, yes, not buying good quality, but have a more loss in the, yes, if anything happen. In the same, if we don't provide the uniform to workers, safety shoes, it's legislation as well. If we are on the public, it will be, if we involve in the child labor, or if we don't pay the right wage to women, especially, yes, in some part of the world, so that will be bad press. So we need to be very careful. Okay. So focusing on the risk, activity can easily be low ability. So we can't take the competitive advantage. You have to be understand, and we have to look around what losses can be. Mobile phone operator will produce its phone in worldwide of colors. A little or no risk of technology falling, but the move can be provide limited advantage where the customer attract to the particular color phone. But really some pink color cover, yes, mobile phone cover, lot of people like it, and the company charge high price out of it, yes. So we need to be think about what benefit we will be, what risk will be. Yes, low risk activity normally have a low benefit, will provide high competitive advantage. We need to think about, yes, how we can manage. High risk normally is a high return, generate low or high competitive advantage. We need to be managed. Each has advantages and disadvantages. So if you're a risk taker, yes, some people say, sorry, I don't want to invest in business. But some people, we discussed last previous lesson, Bitcoin from $12 to $27,000 it went up, the price of the coin. So in shares. So we need to be think about, if you can go ahead, but which is very risky as well. On other high risk activities may generate significant amount of advantages. GPS. What is a GPS? Yes, which is ground positioning signal technology. Yes, if we use it, we can monitor where. So if we are using this in our mobile phone and we are offering that mobile phone, it's more advantage, but it's a cost as well involved. So we need to be think about research and development. So first thing, risk identification. You have to identify the risk. What are the future risks? Are you looking more benefit now? You not worry about future. So like if we stop learning, either we are 80 or 20-year old, we become older. So if we not learn it, what will be happen? Employer will find the new skill and they will say, okay, you goodbye. Yes, we become redundant. So we need to be think about the risk of not learning, not moving, or not keep ourselves moving. So risk types can be market risk. The risk may derive from the sector of the business. Yes, that can be we are operating. So think about, if we're not selling online, if we hate technology, we don't want to learn computer, we don't want to introduce computer, we'll offer the services in accounts like just on the normal. So that's all. We need to think about robots. We need to think of that's the big problem with some country. They're not, in term of we never thinking so we have a high risk in our market. We're not gaining what other countries are gaining. Okay, so we need to be think about commodity price. Commodity price means the product price. It's go up and down. So we have to be make sure we manage it. Quantity prices go up. So some people buy oil now. They say this will go up, the prices when the this COVID will finish. Yeah. So we need to think about maybe or maybe not. Product reputation. Yes, is huge impact on that. Okay, then next we can look around the credit risk. Credit risk, if you borrow money from, is a high risk. If you have a too many credit card, yes, some credit card is called as a sweet killer. So we need same in a company. If you have lot of credit or you provide the credit to the customer, maybe they not pay us money in future. So we need a good credit policy. We check the credit scoring. They entitled to get the credit card or the credit from the banks or not, or even from the company. So we need a credit vetting. We need assessment procedure. Liquidity risk. Maybe the company will become liquid. They can't afford it. We discuss about liquidity ratios. Yes, so we need to be this. We need to be assess those risks. Currency risk, we need to be managed. All these are come under the financial types of risk. Any question?
No, it's clear.
Okay, then we have interest risk. High interest, high cost. Okay, gearing. What will happen if you drive your car high gear? Is a high risk. If you borrow too much you have a too much loan from the bank, is a high risk. So you have to think about if you're doing business by borrowing and you don't have your own money, and if you don't generate the profit as a new business, what will be happen? You can't afford it to pay money to the bank. You can't meet your running expenses. Ultimately, after a few months, you will close your business. You say it's not worth it. Yes. So we need to be always assess the risk. Political risk. Yeah, different political parties have different manifesto. So that's the risk, we learn about political, economic, social, and technological factor, which I mentioned best. We have these risks. We have to be, this is micro level. We can control it. We have to adjust it. Okay, legal risk. Laws carry on chaining. The laws change. They say these products you can't, like diesel car. Yes, in from 30, 35 onwards. So what will be happen if we not? So by law we can't sell it, like tobacco, cigarettes. Yes, we can't advertise. We can't smoke in the front of kids. We can't smoke in the public places because this is the cigarette company. But if the government is promote gyms, free bars, and alternative activities, maybe the cigarette will be less used, and the cigarette company will earn less money due to the legislation. Yes, due to the health issue. But as a nation is gain more, because if you increase the time of drinking, ultimately more crime will happen, and you require more police for it. Maybe you generate more money out of because through tax rate. But think about maybe the lot of people lost their lives due to the crime, or their family life can be, or the family structure will be destroyed. This is all about we need to think about legal and what impact it can be. Regulatory risk is highly regulatory. We have money, lot of legislation, dumping and company laws and various others legislation. We need to, if we don't follow it, we can be penalized. Compliance risk, if we don't comply, if we don't pay the national minimum wage, in especially in the European countries, is hap. Then we have a technology risk. Technology is always change. It's never stay the same. You have to measure the risk. Like Nokia never measured the risk rightly. That's why they're not ahead than other competitors. Economics risk, as a country, unemployment. Don't have a good school. It ultimately will be future economics risk. If you don't set up good roads, infrastructure, airports, and it will create the economic risk. Environmental risk. If you're polluting, you're not caring about environment, you're not planting trees, ultimately environmental risk. And that can future impact our businesses, the country will. So we need to be around business ability risk. Yes, risk is related to governance, well governed, how well you control. If we do not fulfill the requirement of our student, if we don't reply our student effectively, if we don't have a good communication with our student, we are the business, so we will suffer from it. So we need to feed our customer service. Our quality of delivery will carry on improving. So we need to be carry on looking because there's a risk, because many competitors carry on derivative risk. Yes, we can risk refer to the risk due use of an instrument. There is a risk of significant loss or the gain. So we need to be think about in various financial options. Entrepreneurial risk as a business can be associated with many new business venture opportunity. According to Ansov, Igor Ansov, one of the scholar who was the Russian studying, he said, we have to use the strategy. Is expressed term of the unknown of the market and the customer reception of the new ventures. Uncertainty, product design, we need to be measure those, what is happening, are product design fit for purpose or not. Okay, risk mapping. Mapping mean you map them. Yes, you check them, how serious the risk, how. If government is not happy with the service, what will be happen? If you not pay the fair tax, what will be happen? If you don't pay the fair wage, your staff not happy, what will be happen? The quality of the service. You have to map the risk is a high, low, medium. Think about if you drive the car in the snow, what will be happen? High risk. It means is a more risk for accident. Yes. So we have to look around. We have to make the likelihood, the chance of happening, the risk. Yeah. So there is a model we can call likelihood. You can accept it or not. So which we'll go through in the further slide. We need to be make sure impact and the consequences we can write is high, low, staff retention. If do we have a replacement of staff? Supplier will deliver the goods on time or not? Yes. Price and cost, what will be? So all these we have to measure the likelihood. So then we look around the area of risk and what impact can be our business. So I included a lot of examples. If you look at the market risk, to provide the good customer required, market overall decline, impact on the company sees the trade. Credit, the company credit rating decrease, the company not obtain the material needed for the production. Okay. Liquidity, customer are not paying quicker. The company problem of the cash. Technology, there is a lack of investment on the research of development like Nokia. The product appear to be outdated, like a Nokia. Okay, then we have legal. If we breach the law, we can be adversely affected and can be fined, like a Google and the Facebook in Europe. 25 billion being fined to Google. So health and safety risk, if we don't provide the shoes, reflective jackets, high, it can be risk. Reputation can be risk. Yes, if we not deal it is a bad on the trust pilot for sport, that can be, we're not going to get more customer impact. Probate is the director officer receiving high bonuses, like Barclay Bank being paid the CEO 2 million bonus when the Barclay not earned a single penny profit. So adversely affect on the profitability. People maybe can boycott this company not. Derivative, the losses made forward exchange contract. So these are the impact and the loss of each area. Okay, then next I have included the slide for you to be look around the risk management process, how we can look around. It's this side is all the explanation of, and this side is all that we just abstract it. Risk, first of all, you identify the risk, the high, low, medium. Risk assessment, prioritize it based on high, low, and risk. We have financial risk, political risk, market risk, what risk we have, and assess the risk, which one is a high, which one is a low. You plan strategy, contingent plan. If you don't get the money from the bank, will be happen. You may be arranged through friend, family friend, or you can ask from local investor to invest. Risk monitor. You monitor the risk, which are high, low. Risk audit. You carry on doing audit. Audit means checking the accuracy or identifying. The process of the management explained here. Risk identification. Risk are identify the key stakeholders. Risk assessment, risk planning, and risk monitor. All explanation of term. Any question? Okay, yes or no? No question? Okay, then we have a strategy, it's called Tara and Sara. Tara and Sara strategy is to manage. What Tara stand for? T stand for transfer. We can transfer our risk to the insurance company. If our things not work, insurance company will pay us. A is avoidance. If we don't do business, we can avoid risk. But how we earn it? Yes? Okay, response. R is the reductions. We can reduce risk if we can prioritize it, if we plan it well. A is acceptance. Yes, we have to accept the risk up to certain level. If you go out, there are the chances we maybe fell down. If we go out, there are the chances maybe COVID-19. But we can maybe reduce it by strategy, we wearing the mask. Yes. So we need to make sure we can look around all possible strategies we can make to reduce them. Okay, then we have the risk mapping and the risk management strategy. Risk map can be provide useful framework, like we can say low, high, reduce, avoid, accept, or transfer. Yes? Any question? If you not get, please ask. Okay, then next week look around risk. As we mentioned, risk is a probability of happening something. Risk can be exchange, control, regulation, import quota if we have, import tariffs if new tariffs due to the Brexit, insist on the minimum shareholding, company structure can be, super tax is very high tax can be imposed, that can be. We have a policy formulation, monitoring risk, and dealing with the risk. Do we have a risk department? If we have, that's good, that will help to reduce them. Okay, when we're looking the finance, so prior investment, during investment, we need to be look around the planned local ownership, free trading agreements if we have, political risk insurance we can get. During investment, production strategies we need to control processes, distribution control, market control, and these will help to minimize the risk. To understand further, I copied the link to be read, please. That will help you further explore, because there can be a lot of the risk management approaches. And there are the lot of, if you want to do the numerical, we can, this is the risk management, and this is the document, please, which I'm sharing with you. Is good to be, and there's a link there you can copy. You will see the risk and policy decision, lot of scenario based learning, test your understanding about risk, MIS, EIS, and information, executive information system, mitigation, hedging, threats, high transfer, how we can, and fraud threats, whether if lawsuit, all these are the risks and how we can manage it. So what are the approaches can be? So acceptable levels we can make it, risk, managing regulatory risk, identify applicable regulation, understand the impact of new legislation and all, and you plan it. Yes. So you have to look around all capital asset pricing model we discussed, stocks, investing, don't invest in, are the probability of happening things or not, is it more than 5 or less than 5, and you do audit, department, information system, and risk assessment. This is all about, is quite good to be look around the risk, and we can add example in our assignment from these. So that's all today lesson, guys. Today we discuss about risk and risk management, and the next lesson will go through, we finish our unit, and the next lesson we'll discuss about assignment. In the meanwhile, if you have any question, you can send me email on my email address, and hope so I'll speak to you. So you just need to be make sure, please carry on doing background reading, work, and attending, and hope so I'll speak you during next lesson. Thanks for listening and attending, and hope so you all during next lesson. Thank you. Bye bye.